All right, GM guys. So I'm here to do a market review on Bitcoin and gold, and I want to tell you guys why my win rate on this FTMO account is 55% and not 94 or 98%. Like the one I was trading, like the one I was showing you guys a couple of days back. Okay, so the one I was showing you guys, as I said before, it was a trial account. So I was getting ready to trade with the lot sizes of the 200k account. This is a 200k account on FTMO. It's challenge. This is not a trial. Let me zoom out. Come on now. This is an ongoing FTMO challenge. It's not a trial account, okay? So right now I was up 10 bands just a few days ago, but the last couple of days, okay, this week I've taken two trades this week, one win, one loss, kind of just below break even. It's a break even week actually, okay. And last week I'm back to last week's profits, which was 2,000 basically. So yeah, so I was up 10,000 from Friday the 9th of January up until the 14th, and then on the 15th I took a loss on Friday. This took a very it's like this is the best lesson for me so far in January, because yeah, I'll do a review for just this trade alone, because it was an interesting day in the market, and I learned a very very important lesson that day, in terms of technical analysis and stuff like that. So that lesson will be forever ingrained in my obviously in my head. So yeah, let me take you through today's price action and how I lost the 3,200 on my FTMO challenge. All right, so this is how the graph looks like. We opened, dipped a little bit below 200k. There's a first trade. On that first trade I managed to make some money, and I went up for it was the same day here, sorry, this day 2.4 instead of 4k. So I recovered, and then I made 2.4. Okay, so there's like gonna be, I think, 5k day for me. And yeah, so I'm now getting, I think I am now getting the feel, and I'm getting used to trading a 200k account. I've never traded a 200k account before. The only challenges I've been passing at 100k, I've passed in the past 100k accounts, was the biggest I've passed. Obviously I've never went above 100k, but I've had a couple of 100k accounts. No, actually I have passed the 200k, sorry, with no overfunding. So that was just a one phase challenge, so it was easy. It wasn't like this here, and the lot sizes are very something different, and they flew. That problem actually robbed me money. I was due for 13,000 payout, and they just cooked my account. They traded my account overnight. Hopefully that's not going to be the case with FTMO. That's the reason why I chose them in the beginning. I see some good reviews. People are talking about FTMO and this number one problem challenge. So I said, let me grab a 200k and see where it goes. Okay, so this is interesting. It's been an interesting week, and I took this loss today on Bitcoin. But before I talk about the Bitcoin loss, I want to talk about gold and how my model played out on gold. Gold today wasn't as bad. I was just coming into the market today I opened the market obviously around 7 o'clock New York time, and I was looking at gold. I was like, this thing is overbought. Okay, that's how most people would refer to such. You understand? So it's a premium. So, but here's the thing with me, right? I don't need the bias for the day to be bullish for me to make money, because I day trade. I don't hold and swing and do all those things, right? If I see that on daily, maybe we have like for example something like this, which is a very bullish day in the market, you understand? So we just opened and we're already trading above previous day's high. You know what that means, right? It means that liquidity from last we're basically trading at all-time highs at this point, so you don't have like liquidity from last week that you can refer to in terms of target and draw, okay, or draws or draws on liquidity. So you can just obviously you have to shift to a much smaller time frame and use that as your daily time frame. You can use the hourly chart. If there's a nice structure on 1 hour, then you can trade off of that 1 hour. And today for me, M15, usually when you're trading an all-time highs, now this is a key takeaway for you guys. When you're trading all-time highs, I like to use the market structure on the 15 minutes. Obviously I pair that with the time element, which is very important for me, because I wait for a specific time in the market. I don't just execute just because the structure on M15 says it's bearish or bullish. I wait for a specific liquidity to be injected in the market, which is obviously time based. You look at the calendar for the week, you look at things like that, the easy equity stock market opening, and I then take it from there. So I was kind of leaning bearish here. The only thing that made me kind of say, okay, let me trade Bitcoin and not gold, even though I did have a bearish short-term bias based off of the 15 minutes. And I'm now going to tell you exactly what my thought process was coming into today's trading. Well, if you look at the rally here, we have a rally, which obviously we ended up trading above previous day's high, right, overnight. And then you have this nice down close candle here. Now this nice down close candle for me tells a nice beautiful story, especially coupled with this displacement going down here. Now this right here is a bearish change in the state of delivery, coupled by a bearish market structure shift here. So excuse me. Now why am I saying a bearish market structure shift is here? It is also here, okay? So here we have two up close candles going up, taking liquidity here and making a new all-time high at 1 o'clock. Now this is today's price action. This is during Asia. And then 1 o'clock, pre-London session. And then it drops. Now it drops and it closes bearish. Look at this candle, bearish below this candle. We have an imbalance here. We disregard that imbalance by closing bearish below that imbalance, even this imbalance here on this time frame. And if you look at this, we have a swing low, swing high. This range here, we are now at discount, and you also have another imbalance here, okay? So we completely violate all these discount arrays here, even this one, and we feel this imbalance right here, and we create a nice shift to the downside. Now we've created a new range now, and then we start to move sideways, a consolidation. So coming into the market at 7 o'clock, we are already trading up here, and I was looking, I say, okay, I see the consolidation. I'm still interested in the market taking out this low. This was my low hanging fruit, okay, the 15-minute swing low here. Why? Because the market has shifted bearish below this swing low, or you can take that swing low, and there's a change in the state of delivery when you cross the opening price of this last up close candle prior this buy side liquidity being taken off. So this is now a bearish 15-minute structure. I can trade off of this swing high and this swing low. So this will be what my dealing range now. Okay, we have sell side below this low here, and we have sell side below this low with this low. So this is a dealing range low, dealing range high. Okay, so now I want to check and study the price. The price action once we go back inside these up close candles, especially now that we have a swing high inside that at a specific time. So I like it. That's what I wanted to see after 8:30. By then, I had already found a setup on Bitcoin, so I just discarded my analysis and I didn't pay attention. But when I came back with my FTMO account, obviously the one I was trading live with, I had already went short on Bitcoin, and I told them, I said, okay guys, there's another setup on gold, and I actually made money on gold on my personal account, not the FTMO account, but I couldn't share it with them because I said let's not focus on many things, guys. But me personally, I did catch something here, so that was a, gold consoled me in a way because of this sell that I took from there going down. Now this is a nice accumulation and a manipulation scenario now with the framework that I've already outlined here, and you can already see the accumulation, manipulation above this high, and then the distribution of shorts below this sell side here. Now let's go to the 1 minute, and so you can see this how structure was, and pay attention to this swing low here, which is my draw on 15 minutes. I'm gonna label it as 15 minute swing low, and obviously this pink shaded area being what, my consolidation area. Okay, so we break out of this consolidation at what time? This is very important for me. Okay, this is very important. Okay, I can see my software is detecting some, it says skipped frames detected 44% over the last 2 minutes a few seconds ago. Cool. That's a red flag right there. Okay, I'm using a new software. I don't know what to do now because of all these softwares. I haven't been recording videos for my students and for the YouTube community because of the softwares. I don't know which ones to use now. You guys let me know because I'm not used to these things actually. So this is a consolidation zone here, or area here, going sideways. They are building liquidity for when news in back. So normally we have news at 8:30. Even if you don't have news, the algo is coded to do that or to perform that manipulation during that time. So you want to go short or sell above the opening price at 8:30, or above the opening price at 9:30 here, or at that price exactly. So okay, so that's a premium obviously. So looking at how we opened 7 o'clock, we created these swing lows here, generating sell side for later, and then we run away from these guys here, and people are going to try to chase this going long, and then at the right time after 9:30 we sweep what, this buy side liquidity here, the 15-minute buy side of the consolidation swing high. We sweep it, but we don't give a nice bearish market structure shift here. We hit the bullish order block here. We rally one more time now during the macro. So the macro, this is where the new hour forms, the 9 o'clock hour. So it opens, it gives, this is a 1 hour high, the candle 1 hour candle high here, but on 1 minute, and then it sweeps this buy side, including that buy side liquidity right there during the macro, and then it drops when the bearish market structure shift occurred right there, and then we closed bearish below this inversion. I was then now more confident in the setup because I saw that okay, now we are completely invalidating this C, because we could be easily reclaiming the BC here. So I had to wait for a close outside of that BC for me to trust that okay, now we are ready to punch lower. And then I went short on this candle close, and then I added more when it went inside that CB right there, and it made a nice institutional order flow entry draw at the CE, which is a consequent accrement of this inversion fair value gap. And then before I could tell them that hey guys, I actually went short on my personal, I just saw money in my account because it was so quick when it delivered this sell side. I had my target just below this. I placed my stop losses below this relatively equal lows here. I didn't wait for my 15-minute swing low to be tagged, but we had countless opportunities here. It's just that when I took a loss on Bitcoin, I said, guys, this is going to be the only trade for us today. But I want to show you guys something. After this initial drop, there was a nice trade here. If you waited for that fair value gap to get filled, let's see the RR. This was a nice, I'm sure it was a 3R trade. Yes, 3.4R trade. Boom. So you risk 1,000 to make 3,000, 3.4 thousand. And then again, we came back. Now, 9 o'clock. Now, we have already established a bias. Now, this is confirmed. We are coming for this guy down here. Now we wait for again 9 o'clock to open and give us the first presented fair value gap. Now 9 o'clock, before it opens and it creates relatively equal highs here. Obviously you don't want to go short using the first presented fair value gap here. You know that we are going to have to price in some sort of premium. Now this is the range you are working with, that swing high and this swing low here. So yes, the premium is this is equilibrium of that range. The premium is obviously up here. It does that, it hits the bearish order block and the OTE level, and then it starts to drop lower, creating a bearish market structure shift here. And then you wait, because you're either gonna sell the close of this candle after taking out the relatively equal highs. This candle close, you sell it, you put your stop loss above here, or you wait for a return inside the fair value gap and you have your stop loss above here. Or you study the macro and you wait for a new presented fair value gap inside the macro and you take that one, which is a nice confirmation after we returned all the way up to the premium of this range here, and we beautifully hit that main threshold of this bearish order block, and also the opening price at 830 right there. Look at the board is respecting that. This is not buying and selling pressure, guys. This is not buying, this is the algo. So if things like YouTube and Twitter are ran by the algorithm, you can't just be famous overnight. What makes you think that gold, something that could potentially make people billions, could be just left to the public to decide which side they're going to pump it? Doesn't make sense, right? So this is now proof that these things are, this is an algo. Look at the reaction from the opening price here, 830. Look at that. And also look at the opening price here, 930. Look at this. And these are all entries. So if you understand the narrative, if you understand price action like how I do, then these things are visible. When they happen, you are able to capitalize. Okay, so now after clearing this internal buy side liquidity here, relatively equal highs, structure shifts bearish, you wait for a premium, return to premium, because we're going to sell at premium. This is the range now you're working with. And then once you cross the equilibrium, you can now start looking for your PDRAs and wait for a confirmation there, or you can just sell on them. Make sure your stop loss is protected above the high resistance liquidity, which is the high that cleared these relatively equal highs here. Or you can wait for this one, and then you can use this fair value gap with the opening price at 930, with the first presented fair value gap being utilized now as your reclaimed CB, and then the opening price of this last up close candles with the confluence of 930 open as your entry. Beautiful confluence. And look at that time again element, which is the macro, and then it drops all the way down to the 15-minute swing low, which was what my bias was telling me to aim for. Beautiful trade, guys. So let's say maybe I wasn't convinced when this was happening, but after obviously the market giving me these relatively equal lows here, and also clearing these post 930, I was definitely gonna capitalize on this setup here and call it a day. So unfortunately, I had already positioned myself on Bitcoin and I took a loss. So if I take a loss and if it fits my desired risk for the day, then I don't qualify to then execute or entertain any other setup on that day. I have to wait for the following day. That's part of proper risk management, and obviously the discipline that you need to be a professional like myself. So I don't want to make this video a long one. I'm now going to record a new separate video, or maybe let's just go to Bitcoin. I'm going to be very quick here. Let's go to Bitcoin, BTCUSD. Okay. Okay, Bitcoin. Okay, I don't have any drawings here. Okay. So I'm just going to get into BTC now. So Bitcoin closed bearish yesterday. So this is yesterday's candle, daily candle. So my aim was just the previous daily low, previous day's low, Tuesday's low on Bitcoin. So let's have that as my best case 10 minutes. So usually if I have such a long candle closing with the body below the previous daily low and I'm bearish, this becomes my low hanging fruit. When you open above the previous day's low, I then target the previous day's low as my low hanging fruit. So this was my draw. Now I just needed a 4-hour or 1-hour structure that supported my my draw, which was the daily. So there we go. Now this is what I saw, right? So when I came into trade, the market was already down here inside this imbalance, right? And I was like, okay, this is it, and I just need to get the sweep. Let's go to 15 minutes now, and it was actually a quick analysis. Okay, the 15-minute structure, to me it looked beautiful. I was like, okay, this is it. We are inside the top fair value gap here on 15 minutes, and we're just gonna move now from these to these relatively equal lows here. I'm gonna put them. This was my low hanging fruit objective. These were pre-market range lows. So if you know, you know. Let's go down to the 1 minute and look at the structure here. Boom. Now I'm gonna tell you exactly what I was aiming for, right? I have two draws on liquidity, one from the daily and one from the pre-market range. So this makes my setup an A+. Okay, I have the daily draw, which is more significant, and the session draws on liquidity here. The market opens at 8:30, and then it takes out what? It takes out this swing high here, and then it shifts structure to bearish market structure shift here, and then I go short on this candle closing price here, the closing price, stop loss just above here, and I'm like, okay, let's go. I'm gonna get a nice 2-hour trade here, and then the market does this. Okay, so now I don't like taking a trade if I don't understand how and why I lost a trade, and this is how the loss happened. This is where I lost the 2 point, is it 3,000? Yes, that loss on FTMO. Okay, but these were too clean for me. I was like, okay, how can I lose when these are too clean and they were created just after 7 o'clock, and I know they always hit. This always happens because this is my model. I've backtested this for like, I don't know, I'm going to show you the screenshots on my Instagram to prove. But then I was like, okay, maybe there's something I didn't notice on the hourly, because obviously the hard time frame rules, right? And boy, oh boy, when I went to the hard time frame, which was the 1 hour, you can see yourself, you can see for yourself, the structure had shifted bullish above these highs. Look at the body closing bullish above these last down close candles, and then we were at discount of this. This was a retracement. Okay, this was a retracement to fill this imbalance. If you study, let's remove this. If you look at this imbalance on the hourly chart here, look at the bodies. The bodies are not closing. They are not closing outside of, below the consequent encroachment. And look at what I was aiming here. This was just a rejection. Took out the rejection block here, filled the imbalance, and obviously we can't go to the downside before we clear this guy. The market has to cancel this by rejecting higher prices just above this. It can do that by wick above and then close below it. I like it when it does that. Then the bias, which is bearish, can continue, can be delivered here, even if you're right. If there's already a 1 hour structure which is bullish, it has to be respected. It's gonna be respected, even though we are bearish, just to take out the buy stops above these, and then it's going to drop. So the information is always on the chart. I don't rely on news, Trump speaking or what. I just know when Trump is speaking, what I anticipate is now going to be delivered. Sometimes I don't even trade the news, so I don't even need that data even to speculate. I just wait for it to obviously be done, and then I go in the markets afterwards. Now, after we went above the swing high, which is obviously a structure that had shifted bullish on the hourly chart, I was then and then smart money obviously distributed, and actually they were pairing their shorts with the longs that were situated above here, and then they went all the way down. So I move with the smart money, you understand? I move with smart money. So above that, there was a trade for Saikido. Let's go to the 3 minute thingy. There we go. So now, with my draws on liquidity, which was bearish bias, they were delivered after these guys were victimized up here. So I was watching this drop here, and I was like, okay, I'm just gonna watch the drop just to feel it has to please my heart and not participate even. I was so tempted to go short inside this fair value gap here, this imbalance, but I was like, nah, boy, you are done. You have to be disciplined, and I'm very proud of myself because I did not entertain the feeling of going short, even though I could see that, okay, it's now falling. It's a free fall. It's ready to come below these lows that were created after 7 o'clock. And boy, oh boy, I want to say this about Bitcoin. No move is exaggerated with Bitcoin. If the structure permits, it's going to be delivered that day. Case closed. No negotiations, no, bro. And I love Bitcoin for that. So if it was a Euro USD wasn't going to deliver this today, bro. It wasn't. If it wasn't going to give you chances to even go short. It was just going to be one directional because it's going to be so quick. And, and yeah, this is obviously the $1 million model set up, and this trade occurred during lunch, which is now I'm getting more data from the markets. And I'm now pleased, I'm now relieved, and I'm now happy that, okay, I see where I got it wrong, and this was a good lesson for me today. And yeah, by that, guys, and also I am documenting my trades here on my Instagram, Saikido_capital. So if you go to 2026, this is where all the trades are. Okay, so all the trades that I take, I document them here. I want to pass this phase 1, and I'm documenting the trades. I'm trading live on Discord as well. If you want to join, do reach out, let me know. I'll just tell you how much you're gonna pay. Obviously, I think it's also here. There we go. It's right here. Okay, it's right here. So make sure you utilize that and come join me. I trade live almost every day on Discord. See you guys on Discord, and yeah, ciao. Cheers. Hope this was insightful, and yeah, next time you watch this video, this will be up 20 bands. Let's go. See you on the next one. Cheers.